Now, passive investment strategies, as represented by ETFs and ETNs, have made convincing arguments to be included in investors' portfolios. But the decision around which ones to include is becoming increasingly complicated due to the wide array of products in the South African market. So what should investors do? Founder of ETF SA, Mike Brown, joins us in studio to answer the question. Do we show all the active managers the door, Mike? First up.
Listen, there's room for both active and passive management styles. What passive does is just invest in an index. So you're buying products which give you the performance of an index. Index always measures the best shares in a stock market or in a sector. So you're buying the average return of a market. And the big advantage with ETFs and ETNs now in South Africa is there's over 60 of them. And you can invest in not only local stock markets, but bond markets locally, but also internationally in all the major indices around the world, commodities, currencies. So you've got ETFs, ETNs now across every asset class. And there's a lot to be said to put together a portfolio of ETFs or ETNs and just run your portfolio on that basis.
Well, we've often discussed, it doesn't sound like a bad option given the performance that we're seeing out of these indexes.
Absolutely, and I think we saw some at the Morningstar Awards this year, Mike, some of the ETFs coming through and winning awards there. But are we just being nice and saying that there's room for both active and passive? I mean, we had Warren Ingram on our show last week. He's a financial advisor. He doesn't believe he can successfully make the choice of which funds are going to outperform an index over a given period of time. So he prefers just to use ETFs. You know, should the passive industry be a little bit more vocal around the chances of actually capturing the right fund over the right time period to deliver alpha, or should we just stick to ETFs?
I think 80% of unit trusts can't outperform an index in South Africa. If you take over the last 5, 6, 7, 8 years, and so the measurements, the performance numbers are there. I think most investors know that it's very hard to outperform an index in South Africa, and also internationally. And the reason is because most of your shares in South Africa, only 60 shares really trade, and you can buy those 60 shares in an index. So you know why go and find an active manager, unless he's taking some risk by trying to select which shares will do a little bit better than the market. But the market's efficient and it puts the right price on shares. So a lot to be said for index trackers. But what you really need to do is, of course, how do you put these things together? You know, what's my asset allocation? How much do I want in equities? How much do I want in bonds? And what we're finding recently in the last couple of years, the big performance in ETFs has been in sectors that active managers don't pursue. For instance, listed property has been giving you a 40% return over the last year, but well over 25% return over the last 5 years. Now, very few active managers can better that in an equity portfolio. The other one that they don't get into to any great extent is internationally. Most portfolios I've seen, increasingly people bring me their portfolios. They say, my unit trusts are not performing, tell us what to do. They don't invest internationally. And the reason is asset swap capacity limits them significantly. You can only put 25% of your funds offshore. So if 75% of the investors are under-invested internationally. Now with an ETF, there's no asset swap capacity. These are rand investments. They track international markets, but they list on the JSE and they trade in rands. Doesn't affect your foreign exchange allowance, doesn't affect your tax clearances. So increasingly the role or the case to use ETFs is being made. I don't want to argue with Warren Ingram. It's nice that he's finally turned. I always thought he was an active proponent. Now he's saying, well, he likes passive.
Well, now let's go back to the original question. And how do you choose which ETN or ETF to go into? Because you're spoiled for choice right now.
Yeah, I think you look at performance. So if you're saying, well, I want to be, let's say, 40% in South African domestic equity, you can go and try and choose a portfolio of 20, 30 shares. Or you can say, well, what about the Satrix India, which is, it's been the top performing unit trust ETF over the last 10 years, 7 years, 5 years. It's the only one of those products that's in every performance survey. Satrix India is in the top 5. No other unit trust has had that consistency. So now you've got a nice consistent performer. You say, well, I don't just want to be industrial shares, I want to be in financial shares. So I then take the Satrix Fini or the new funds ERAFI. And maybe I want to be in the second tier, I want to be in the mid-cap shares, so I can buy R&B mid-cap. So 3 shares gives you exposure to a portfolio of nearly 100 companies. And that's a good way to start your investment. Then you say, I want to be offshore, I want to be 30% offshore, so I pick and choose a couple of ETFs in international markets. I want to be in inflation-linked bonds, and I perhaps want to be in property. That's a portfolio. You pick 5 or 6 ETFs,
and
you really would struggle to outperform that.
You've got that's it. And I mean, Mike, you involved with this industry from the genesis. Has it surprised you how many products we have now? After a fairly slow start, we kind of saw some players. Satrix obviously was the first into exchange traded funds locally, but then we had we've just seen a massive amount just in the last year of products coming that are now available to the investor. Does it surprise you? Are there things we're lacking still? I kind of get the sense though that we've got 5 offshore ETFs, we've got a couple of ETNs in that space, but we could be doing a lot more for providing for the offshore needs of investors.
Yes, I mean, we've only got a couple of offshore ETFs and ETNs, and they're quite expensive, much cheaper than unit trust, by the way, but still relatively expensive. I think there's still scope for other people to come into the market, new providers, and the existing issuers to issue products. That's one of the problems with the collective investment schemes and all the rest. You launch a lot of products and see which ones work. So whilst we've got 60 ETFs and ETNs, we've got over 1,000 unit trusts. Now I hope we're never going to have 1,000 ETFs and ETNs, but we will have more. The choice of which ones to pick and choose, look at the performance, and then look at the underlying portfolios. ETFs are very visible. They tell you exactly what's in their portfolio all the time. There's nothing hidden. And say, is this what I'm looking for? And also, don't put all your money into one ETF. I find the big risk, there's 60 ETFs around. Everybody says, well, I only invest in Satric 40. No, there's
so you
all
need
sorts
to
of other
diversify within your ETN or
100%.
ETF strategy.
Exactly, Bronwyn, exactly. If you do that, I think then you really are, even as an individual, you can run your own portfolio.
And it's a lot less, let's just go back to fees in the ETN, ETF space. This is a lot less expensive than paying active managers.
Oh yes, active managers, there's a lot of skills involved, there's a lot of risk involved, there's a lot of compliance involved. Those are expensive products. They're over the counter, they're not traded in the stock market, so the settlement in ETFs is very cheap. And the products themselves are cheap. So certainly, why give away a lot of costs and fees to advisors? That's not necessary. ETFs.
Warren, it's a convincing argument.
It is, absolutely. But Mike, I always, we see the performance of the ETFs, and we had them on the show last week. We did a monthly wrap and saw the performance of ETFs against active managers. Very strong case. Why is the market not bigger? We kind of seen that it's getting larger, but it's not quite anywhere near the size of the active market yet.
It doesn't have the distribution that the active managers do. The active managers have got salesmen and financial advisors, and they've got a whole distribution platform out there. ETFs can't afford that. They're not high cost. They can't afford to put TV adverts on with respect to TV and advertise and promote and have a big distribution sales team out there. So ETFs typically are sold online. And people are only starting to realize in South Africa, you buy everything else online, you can actually also buy your investments online. And all the information and stuff that you want is available online. So as people become more comfortable doing investments themselves, or their financial advisor becomes more comfortable recommending ETFs to his clients, I think we'll see that picking up. But it's picking up quite strongly at the moment. It's taken longer than I would have thought, particularly given the international experience where ETFs and ETNs are significantly bigger now than unit trust. Yeah, it's commonplace, normal. Yeah, South Africa, we're still on the up path, but the momentum is upwards.
At the moment, very much still discretionary savings, as far as I understand the industry. People are using it for discretionary savings to top up and add to and save for specific things. We're kind of seeing some penetration into the retirement savings market. But how do you think the industry goes forward into that, which is obviously the biggest pool of savings in the country?
Well, the government keeps saying, why don't people save with passive products in retirement funds? Because, retirement funds, the biggest menace to a retirement fund is high costs. So I think we will see big penetration taking place there, and a lot of people are looking at it and looking at how to do it. But the industry's, the fund management industry is very conservative. Particularly in South Africa, it takes a long, long time to change.